And welcome back. Probably the biggest news to hit our housing market this week was a big drop in rates that we saw on Thursday. So as of today, which is actually Thursday, the 10-year US Treasury note decreased by almost 20 basis points today alone, which is Thursday, December 1st. Happy December, everyone. So the yield on the 10-year US Treasury note is at 3.5%, down by 19 or almost 20 basis points compared to Wednesday. This caused mortgage rates to decrease big time today. Have a look at this. This is according to the Mortgage News Daily as of today, which again is Thursday. It says mortgage rates drop sharply, hitting the lowest levels since mid-September. So rates right now are at the lowest levels since mid-September. And what's remarkable regarding this is that rates were more or less flat at 6.6% for 3 weeks. Rates have been very flat over the past 3 weeks here. But rates decreased big time today, which is Thursday. And the Mortgage News Daily says that mortgage rates have been on a holding pattern for nearly 3 weeks, following the November 10th CPI inflation data. On that single day, which was on November 10th, the average 30-year fixed rate fell by a record amount. That took rates from the low 7s to the mid 6s in a matter of hours, and there they have stayed until this morning. This was in response to a well-received speech from the Federal Reserve Chairman Jerome Powell, which is a speech on Wednesday here, and stronger than expected bond buying. In other words, when more people buy bonds, that increases the prices of bonds and cause the yield on those to decrease. And because people are buying bonds right now, yields have been falling big time, down by 20 basis points for the 10-year US Treasury note, which is tied directly to average rates on mortgages. In regards to rates being around 6.6% for the past 3 weeks, look at this, because going back to November 10th, rates were averaging at 6.6%. Then all the way until we hit November 30th, rates were also at 6.6%. So rates were flat for about 3 weeks. But today, rates fell to 6.29%, which, by the way, have a look at this, because back on November 1st, let's call it the beginning of November, rates were averaging at 7.3%. This means average rates have decreased by about 1 percentage point over the past 1 month alone, which is absolutely insane, going from 7.3 to now 6.3%. The significance regarding or the impacts to home buyers right now regarding this decrease in rates by 1 percentage point. If you guys all follow the channel, you guys know where I'm going with this. For every 1% decrease in rates, that causes a 10% increase in buyers' purchasing power. And because rates have decreased by 1 percentage point over the last month, home buyers right now have approximately 10% more purchasing power than they did just 1 month ago. If you guys are actively looking to buy a house right now, definitely reach out to your loan officer to talk about options, because chances are, because rates have decreased so much in the span of just 1 month, chances are you're going to qualify for more for your home loan. And because rates have decreased so much, so will your future housing payment as well. So my advice to you guys, reach out to your loan officer as soon as possible, because there's a lot of changes going on with the mortgage market right now. So here's what Freddie Mac had to say regarding rates as of today, which is December 1st. It says that rates right now are averaging at 6.49%. Based on their weekly survey for lenders. And Freddie Mac's chief economist, Sam Keeter, had this to say: mortgage rates continue to drop this week as optimism grows around the prospect that the Federal Reserve will slow its pace of rate hikes. Even as rates decrease and home prices soften, economic uncertainty continues to limit home buyer demand as we enter the last month of the year. And by the way, 1 year ago, rates were averaging at 3.11%. And again, right now, it's approximately 6.5%. And these quotes, by the way, are for people with exceptional credit, of course, and for people putting down at least 20%. So that's Freddie Mac. Let's have a look at rates according to the Mortgage News Daily, because as of today, their average rates are at 6.29%. On a national level, of course, with people exceptional credit, of course, 6.29%. And again, this is a 1% decrease compared to 1 month ago, and also the lowest rates we've seen since mid-September. I also want to share an example about how this is impacting home buyers right now in regards to your average monthly future housing payment here. So 1 month ago, again, rates are at 7.3%. Let's say you're buying a $400,000 home, putting down 20% down. So your loan amount would be $320,000. and your principal and interest payment, or your P&I payment, would be $2,194 per month based on rates 1 month ago. Have a look at this though, because it's pretty crazy. Fast forward to today, again, rates at 6.3%. Again, buying a $400,000 home, your new housing payment would be $1,979 per month. In other words, because rates have decreased about 1 percentage point compared to 1 month ago, this equates to $215 per month in savings compared to 1 month ago, because rates have decreased by about 1 percentage point. Therefore, if you're looking to buy an average price home today versus 1 month ago, you're gonna be saving about $215 per month in your average monthly mortgage payment. It's gonna be very interesting to see what happens with rates over the next coming months. But keep in mind, of course, that inflation is still at very high levels, and the Fed plans to raise rates further in the next coming months. And actually, they plan to raise rates by approximately 50 basis points in about 2 weeks from now. And as the Fed continues to raise the federal funds rate, that puts upward pressure on mortgage rates. Of course, a lot could change. I'll definitely keep you posted. I also want to talk about some other early indications of home buying demand, because this decrease in rates, we'll have to see if that causes an increase in demand. Time will tell. This is only one day where rates actually fell big time. So we'll have to see what happens in the next coming months. But I also want to talk about some more early indications of home buying demand. And I want to talk about pending home sales first, because according to Redfin across the nation here, pending home sales for the week ending, or the 4 weeks ended November 27th, are down a whopping 37.7%. This is going to be impacting closed home sales in December and January, because we're seeing a decrease in contracts being signed between buyers and sellers, down by about 38% on a year-over-year basis. So that's what we're seeing nationwide right now, down by about 38%. But look at this, because in Las Vegas, Nevada, pending home sales are down a whopping 65% on a year-over-year basis. Also, Austin, Texas, down by 57%. Look at this, Jacksonville, Florida, down by 55%, and Sacramento, California, down by 54%. So we're seeing a huge decrease in home buying demand in Austin, Texas, Las Vegas, Jacksonville, Florida, as well as Sacramento, California. And something else we're seeing right now that's indicative of a slowdown in home buying demand is this right here. These are real estate showings across North America, according to showingtime.com. And the most recent trends they have is for the week ended November 30th. So home showings are down a whopping 50.1% compared to the first week this year, down by 50% compared to January. Compared this to last year, we were down by 37.1% compared to the first week of 2021, whereas in 2020, down by 26.3% compared to the start of the year of 2020. In other words, when looking at real estate showings right now compared to last year, we're down about 13 percentage points, which is pretty astonishing here. And also, we had fewer real estate showings in North America really ever since the middle of July as well, which is pretty crazy as well. When looking at the number of home showings back in July and August, we had fewer real estate showings then compared to the first week of this year. And yet another sign that home buying demand is decreasing is this right here. Here's Redfin's Home Buyer Demand Index, which is an index based on requests for home tours and other home buying services by Redfin agents. That index is down by 20% on a year-over-year basis, well below 2020, and of course, about 20% below 2021's levels as well. And this index has been falling big time ever since April this year. Also, when looking at this graphic right here, it makes sense they had layoffs back in June, which is right here, and also in November as well, which is right there. And with that said, please comment below your biggest takeaways from today's video. Also, if you guys got any value to this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.